Good evening, Wizards, and welcome to episode 26 of Wizard Wednesdays. Now, yet again, we've had a very peculiar week in the market with some very interesting ups and downs, but overall, it's been a fairly slow week. And the main predominance focus of this lesson is actually just focusing on updating from the prior episode where we covered the potential short setup and, of course, the reversals from the likes of the $9,000 region, which we saw a perfect reversal from. As for XRP as well, we saw an incredible reversal straight to our target region, which is currently holding phenomenally well as well. And just to note, I have a bit of a sore throat today, so if you do see me or hear me running out of breath, that's just because of my sore throat. Hopefully, we shouldn't have any issues throughout this video. Now, looking at the dominance right now, we are actually sitting at around 70.6%, which is currently the yearly highs for BTC dominance. And again, if we go over to the chart over here, this is why in particular I have been focusingly pretty much on BTC in particular, because the dominance is increasing massively. Now, the reason being is with a higher dominance, it means that BTC's movement is going to have a much larger control and grip over the market versus the altcoins in particular. Now, despite the fact that we have actually been increasing quite drastically, again, we are still down a fairly large amount from the original 95% dominance from 2013. But 2019 has brought forward a major boost in the BTC dominance, where we actually started off around 50%. So we've managed to gain around 20% within a year of BTC dominance. So therefore, when it does come to the analysis and the trade setups, for example, we do need to just keep on focusing on BTC for the time being until we can see some form of potential drop. And I'll get into in a minute as well. If you remember from the prior episode, we had this region here where hopefully we will be seeing that downside push down to this region. If we put this into consideration, that we could actually be landing around this region, the BTC dominance would potentially drop again back down to the 50% mark or even lower. Now, when you consider this being a fairly high possibility of occurring, we also know when the BTC dominance drops is when the altcoins begin to rise. So we can see a very similar confluence occurring within the market right now around these sorts of levels, because as this level starts rising, and you can see it's almost got a trend line in itself of progressively going higher, there is inevitably going to be a turning point where BTC does lose that momentum again. So let's actually just kickstart with what the market's doing today as well. As you can see, we are a little bit up in the market overall, but on a 24-hour basis, we have seen a little bit of a pullback from the stated regions given in the prior video and in the Telegram as well. And in particular, XRP has been following a little bit easier with the overall analysis, and it has been moving a bit more in line with what's actually been projected, whereas BTC did see that little push higher. And as you can see right now, we are actually seeing a potential breakout of this trend line as well. And you're going to notice this trend line here is a little bit sloppy and a little bit messy, and it's as if I've almost made it up purely for the sake of this scenario. But actually, when we go over to the weekly time frame now, what you're going to realize is this is a perfect weekly trend line we're currently holding within as well. And I'm going to show you how these trend lines confluenced with the potentiality of falling lower could actually add up to create another confluence of this potential downside move. So looking at this right now on a daily basis, we actually called the reversal perfectly from this zone, originally targeting around $10,000 to $10,100, which on a daily basis, as we can see, we absolutely rocketed through the roof. But if you were paying attention on Twitter, there was actually coverage given, and in the Telegram as well, regarding the possibility of wick fishing all the way up to around 10,800 and 10,900 respectively. Looking at this right now and how this is currently moving, we are actually at a very critical level in the market, and it is a bit of a make or break. And this is predominantly why we are focusing more on trade updates in this specific episode versus actually trying to identify new setups, because we technically have a running setup already, and on XRP as well, we do also have that running setup. So having a little look at this right now on this daily, let me just show you the weekly first to show you exactly why I'm looking at this trend line here. And again, this is the marking point of where I believe a potential turning point could be around the launch of BACT. Now, if you look at this, we have the first wick, the second wick, perfectly aligning to reject the third rejection of this trend line, and now we are back here on the fourth rejection of this trend line. So looking at the overall price action, the $10,000 region is a huge level of psychological support and resistance, and it has been predominantly throughout the tests of time as well. So we've seen prior, when we did actually see the downside pullbacks, what you're looking at here is a rejection of the support level 2 times in a row before actually breaking lower, pulling back up, and then rejecting yet again, and then falling lower, tapping one last time before dipping us down for the early stages of 2018 down to the $6,000 region. As we actually broke higher again, as you can see, this level has been critical of the current price action, in particular from May onwards. And this is why a lot of focus has actually been put on this level, because as we've broken through, we rejected, we held the candle body even through several rejections, and then when we did break above again, we inevitably came back down to retest it. So putting this all into perspective and looking at the fact we do have an excellent 78.6% retracement on the weekly time frame as well, alongside a trendline confluence and $10,800 at the next upper resistance level. Looking at this now, this is what I'm waiting for to really confirm what could be occurring next with BTC. The daily candle focus for me is probably higher than ever right now, as the 4-hour as well is showing some pretty interesting signs. Looking at what's happened, we saw a perfect reversal from this zone, which was covered in Telegram, but I did state we may still see some wick fishing on the upper spectrums of around 10.8 to 10.9. Looking at this prior wick here and looking at this level here around $11,000, I would only consider this setup invalid if we did in fact break above here and breach these wicks with a strong candle body closure. Otherwise, if not, then again, positions can also be considered around these regions. However, you do need to take into consideration that we have the wicks here, we have a huge level of upper resistance here, so it's just wise to actually just keep the stop loss above this wick here, because in the event we do actually start breaking above this level, then it's very likely going to invalidate the setup anyway. So you can actually identify a fairly solid and large risk to reward setup on this trade, whether that's from the first target or even the second target, and we will use the second target for this specific example. Having a little look at this over here, you can see if I just drag this all the way above and even just above the wick over there, you have a very nice 6.06 risk to reward ratio on this specific setup. If you did miss the initial entry from here, then you have a second entry here, and alongside this, just using further Fibonacci confluences, this will no doubt be a 78.6 as well. As you can see, just falling short of that, we're currently in the midpoint, but it aligns very nicely with this trend line as well. And again, seeing as we have just broken this $10,000, $10,100 region, that zone overall, getting rid of this for 1 second, you can see that the extensions do align with this next support level that was once resistance. So we are seeing a fairly solid confluence overall on this pair as well, and I'm not really too worried about this just yet. In particular, this daily candle as well, if we do see a daily candle closure below the 78.6 Fibonacci level and the retracement level overall, then we can be much more confident in the downside propelling of this pair. So looking at this and taking some other factors into consideration as well, overall I'm not really too concerned about this right now. I'm happy to let it run its course. And if we shift over to this trend line, here's where things get interesting, because if I actually just clean up the charts a little bit, and we'll get rid of this as well, we'll leave the Fibonacci setup here, but let's just say we drag this trend line down, whether that's from here or whether that's from the body. It can be completely up to you, but we do know the general rule of thumb is when the candle bodies are respecting that well, then it's very likely price will extend down further to actually retest the trend line versus actually holding up from wick to wick. And if you want to technically go from wick to wick, then you can see here we've actually broken that already. Going over to the 4-hour, we haven't retested it, but we have broken through, we spiked, we tapped the prior level that we just broke, and we have pulled higher. So there is still an alarming sign, but it's best for now to just let the trade run its course and let it crack on. But in going over to what is actually a very crucial level, even if that's from here, you can see that if you've broken through, if we can extend this here, we know the general rule of thumb, even if I drag it down to here, we know the general rule of thumb is if price breaks a trend line, it's very likely and inevitably going to pull back at some point and actually retest this trend line before propelling higher. And if you consider the fact that we may actually be pulling back and fulfilling this level. You can see the Fibonacci is not only aligned with this setup as well and this theory, but a pullback and retest of this trend line could even confluence exactly at this cross point here, where BACT will start to kick into play. Now, I do believe there's been a few more. I've been a bit behind on the news recently due to a lot of Wizard platform work, as you've probably noticed. I've utilized the lack of real momentum in the market to just focus on the platform yet again and get some new features created. So in that meantime, I have missed a bit about what is actually going on in the market in terms of fundamental news, but I do understand there are new features coming and there are many futures platforms coming as well, with most noticeably being Binance's acquisition of a futures platform and of course the development of their own as well. So there is a steam rolling train, like literally commencing as we speak, of futures platforms ready to be integrated and set live for the institution's benefit. So when you consider that BACT and again CME futures, how we had a kind of detrimental effect on the market first before seeing the next rally higher, I do believe BACT could have that quick meltdown just so those traders, the futures traders, are getting an excellent position. If you consider it in the fact that when futures goes live, let's just say they absolutely dump the market, they will then very quickly buy back in, because at the end of the day, price is very expensive regardless. BTC at 10,600 is still remarkably more expensive than what it was before. So at the end of the day, it's still a very high price, but if they can do anything they physically can to drag price just a tad lower, then by all means they will do exactly that. So on BTC, let's look at the 1 hour as well. You can see we have actually broken out of this trend line here, which is a little bit of a concern, but for the time being, there's not really much we can do. And if you notice the spike to the downside that I covered the other day, this little spike here was the first pullback we saw. The reason I was actually quite concerned about this move is because of how this level here, let me just mark this up for you very quickly for ease of use. So my biggest concern for this and why this setup looks a little bit intimidating overall and why we only entered a very small position of around 20 to 50% is because of these situations. And when the market is moving irrational, we've had a very slow week in the market, it can sometimes be best to actually just go in very small and eventually just stack up your orders once price begins to form a more orderly pattern. But looking at this here, this is what concerned me at first. The fact we broke through this resistance level, we then pulled back and rejected a support. We've pulled back and just rejected again one final time and rocketed higher. So there is a very strong validity around this level, but we can also notice with the price action around the 1 hour time frame on in between the Fibonacci levels, you can also notice it's bouncing back and forth between the fib levels, and breaking above it wasn't necessarily a concerning threat straight away, as once we broke above the fib we did hold it as a support level, but we then broke through and held it as resistance. So there is a lot of validity around this level, but overall all I would really suggest is wide stop losses, by all means necessary, most definitely above this region here. If you want to play it safe, then allow $11,200, but I also want to state in doing that, it does not mean when it comes to stop losses, again, this will be in the Wizard platform in incredible depth anyway regarding risk management and more. But the goal is when you are trading, for example, I'll use this as a short setup now. If you're using margin trading and you're normally trading, let's just say £10 a pip, and your stop losses are normally, let's just say in crypto terms, 200 pips. If you then have to have a much wider stop loss up to here, for example, or up to here, that does not mean you still trade with the same position amount. You have to calculate exactly what you would lose from a 200 pip basis or a $200 basis on BTC terms, and then calculate what you would have to actually reduce your position size by to accommodate for the same size loss if price was to hit this stop loss instead. It does not mean if you're trading £10 a pip, you just leave it £10 a pip no matter where the stop loss is. Your position size always has to be adjusted and calculated to accommodate for the size of your stop loss. And the general rule of thumb is you always put the stop loss first, and then from there you calculate your position size. Many people just go in there with a random number like £1 a pip, £10 a pip, or like let's say £100 a dollar. Like, you have to be very cautious of this, because the way I like to trade is the way it is now, to be honest with you, is relatively cautious. It's a bit more calculated, and for the past month in particular, we've had an incredibly successful trading month. I don't really think there's been any real losing trades. Even the one trade, I believe it was maybe around here, it went a little bit, I don't think it met the target in its entirety, but we still caught the overall bulk of the movements. And this is the beauty of stop loss management as well, because when a trade, for example, from here starts breaking out in our favor, and let's just say we were targeting the next target of 11,600, guess what? If you've made a move from $10,000 to $10,600, you've caught a $600 move, and with stop losses in profit, you've still managed to actually close that trade in a profit. So just because the full target has not been met in its entirety, if you are closing that trade out and you've actually ended up with more of a win than a loss, then you have essentially won that trade. So never look down on your trades that may not have fulfilled their full target. Always be grateful for what the market gives you. Now, in saying that, let's of course move over to XRP, which is again a very interesting weekly perspective on this right now. So let's just remove these for the time being, just keep this nice and clean. This trend line here, I'll get rid of that for now, but I will leave the main overall trend line there. That's very important. Here's another interesting aspect. Now, if you recall, upon the pullback of this region, the first thing I stated, especially on a weekly basis, was we were looking to potentially continue this momentum lower, at least down yet again to around 23.5 cents, down to around 22 cents. Now, putting all of this into perspective, if you see the current weekly candle, we have broken lower from this huge wick down, and instead of instantly reversing, we've actually come down to test if this level does have the extreme buying presence it once had to push this price back up. And as you can see, the bulls have lost a major amount of momentum as the bears have sunken the price lower with stable candle closures without the spikes. As you can see, once you see a huge pull up to the upside here, when you see spikes like this, it just confirms that the buy orders are not going to let the price drop lower. When you start seeing slower moving increments down like this, it does give you a bigger sign that price can usually continue a little bit lower into your favor, or a little bit lower to where it currently was or was prior. So on this weekly perspective, we've broken below the support level that we originally had targeted. We broke through, we rejected once, we spiked higher, a bit of wick fishing over there as well, using this zone as a bit of an ideology as to what I mean. So this was a crucial level. We broke through, we rejected, we touched it one last time, and we absolutely melted again. Now we're seeing a very similar situation, except with this region instead, exactly where the 26.7 Fibonacci retracement is on the 61.8. We've broken through, again, where our mark's 0.265. We tapped it with perfection the other day, which we'll go to over here. So we did actually rally higher from this reversal region. We tapped it perfectly, we saw the spike through, and then we've seen the slight pullback as well. So essentially what you've seen is a breakthrough support now retesting as resistance alongside the 61.8% confluence as well. So on the weekly wick, you can just see we've dropped, we've pulled back higher, we've tapped it, and we've slammed back down. So again, from a weekly perspective as well, if we do start seeing this weekly candle closing bearish, I would say red, but obviously purple in our circumstances, we are going to be expecting a very sharp drop to the downside for XRP as well. So there isn't too much to really say on XRP because it is just moving so slow right now. But one thing I will mention as well is there is now a counter trend alongside this movement. I would still be cautious, of course, of the 78.6 fib. We have seen that trend line as well, A, B, C, 1, 2, 3. And again, 78.6 up here, prior wick. The only way this setup would be invalidated is if we broke above this 28 cents region. So marking this zone out all the way up to around here, that is where I would really be concerned. But again, if we do see a breakout, the beauty is if you do see a rally higher and a breakout higher, all you will have to do, knowing that we've now broken from this trend line, is extend this all the way out to there. And let's just say in the event we do break out and we do start touching this region here, whether you close your positions or whether you haven't entered at all, you know the general rule of thumb is if you break the trend line, you will retest again. And we are seeing that very similar pattern to BTC, where if we do break the trend line and things do go a little bit on the opposing side, we can see a nice confluence with a potential rollover, Fibonacci regions being met. If I extend that out to make that a bit clearer, you can see a pullback could lead to that boiling and cross point here as well, where I do believe things will get very interesting. So again, let's keep a lot of focus on September the 23rd, which isn't too far away now, isn't too far away at all. And more importantly, we have to start monitoring the price action. That's where it gets really interesting. That's why this was Wednesdays is more of an overall update and an outlook and a continuation into the prior episode. However, as we start progressing further towards backed, we will actually be monitoring the price behavior much more closely, because right now it's not really doing too much interesting. So if I get rid of that as well, further confluences, very sloppy, very messy. It's very hard to get this accurate right now, but if you look overall, if I drag that down to there, you can see we broke through, we've now pulled down, we've retested as resistance, which was once support. We've broken that counter trend. We've now seen almost a 3-pin pattern as well. There are many confluences on this pair right now. But due to the lack of liquidity in the market right now, and due to the lack of real movement, we could be seeing some tricks come into play. So the overall biases on both are still remaining absolutely the same. Let's just look at this. BTC is being a real cheeky devil today. But hopefully if we see that bearish closure, then that should just confirm for me, especially with this wick over here as well. We'll fail to close above this wick. And if we fail to close above this wick again, it's just adding to that confluence a little bit more. We could obviously technically cheat and add the body formation from the wick to the body and still see a perfect setup of 8,600. So by all means, you can also do that as well. And it does make pretty good sense because you can see once we held the 61.8, we broke through, closed below the 78.6, which held precisely. We came down and then look where we actually retested upon this current daily candle. We tapped the 61.8 before actually pulling up to be bound and constrained between these two levels. As you can see, we're literally constricted between these boundaries. So if there is enough pressure, then price will fail, and this level will of course cause that catalyst down to $8,600 next. So looking pretty good for now. No real concern, even with this breakout. I just think this is looking very promising. Going over to XRP one last time just to cover and finish this episode off. You will also notice there is another counter trend line forming as well. Now avoid and ignore this conjoining of the trend line and just focus more on this. And if you want to go for a bit more of a cheating aspect as well, then we do have this set up here as well. So overall, if you look at this cross point here, there is a counter trend in play overall. So we've broken through one, we've now potentially formed another. And if you look at this, so if you actually do the 4-hour perspective and make it a bit more cleaner, you can see we've broken, perfectly held, now we're pulling lower. Now if the same thing occurs, if we do it from whether it's this way or this way, we have to wait further price action to really confirm this coming through. Looking at this right now, we do break through this as well. We're forming channels right now. There are channels forming everywhere. So you can see we're forming into channels, and for all we know, if we start breaking lower and we fall down to this level, we then have another channel on our hands. So XRP is essentially, if you remember when I first actually showed you guys one of the videos of how I construct my charts, how I actually orchestrate the charts and layer them like the foundations of a house, you can almost see here essentially what is a staircase and a stairwell to some extent of a house. And let's just say these are the steps to a house. As you start breaking through the level, it starts taking you down to the next floor. And essentially, these patterns here are leading us down to what could be the next layer of the house, on the next level, or the floor, whatever it wants to be. It could be a layer of an onion if you really need it to be so. But overall, I just wanted to kind of keep you guys in the loop in this episode in particular and try to utilize my very croaky voice as much as possible. But overall, guys, things are looking pretty good, to be honest with you. This daily perspective as well on XRP is looking great. All the analysis is still moving perfectly in line. XRP moving flawlessly in line with the analysis. BTC being a little bit of a pain, but overall we are still holding this pretty well right now. So let's see how the next 24 hours go yet again. And of course, in the Telegram, on Twitter, once we start seeing some more movement, then of course the updates can start flying in yet again. Because we saw so much stability over this past few days, and because we were waiting for these regions here to be met anyway, now we can start shifting back to the usual patterns, the usual rhythms, the usual routines of progressively being updated on the market. Because when it's a bit dead in the market, to be honest with you, I do not like to update you all, because it kind of almost promotes over trading, and it promotes and gives you the urge to look at the market into too much depth when it doesn't need to be looked into in that much depth. And that's one of the biggest problems when you're seeing these situations here. I can only imagine how many people probably saw a counter trend line without any real kind of retracements or corrections or anything whatsoever, or any other confluences, and they're probably trying to short it, but it wouldn't even be worth taking that gamble. Now, I know a few of you did actually take the buys from this level, and I did say by all means necessary, if you want to do so, you can do so, because I actually prefer to stay away from this. But the call did come through phenomenally well if you did take it. So there is a good situation, even in a bad situation, and thus far we haven't had a bad situation yet. So if this does go against us, this will be the first trade in around a month that's actually gone against us. But for now, we are holding everything phenomenally well. And let's hope by the end of the week, we can start seeing that pullback even to the trend line here. Because even if we do start propelling higher, if we see the trend line retest first, you've still made a pretty significant movement of even $1,000 potentially if this does drop lower. So you could be looking at a $500 to $1,000 movement in BTC, even if the trade doesn't necessarily work out too well. Now that's a pretty good risk to reward if you ask me. So XRP perspective as well, looking at how this could really move, looking at the drops and looking at how close we're getting to the 23rd of September, we are bound to see something interesting happen before Backed actually launches. But as you know, the drill and the routine, I'll be updating all of this further in the Telegram and on Twitter and on Instagram very soon once we see some more movement.